Good evening, Ira Epstein, and here we are with your SPDR ETF stock market wrap-up, your weekend edition for this June 29th, 2025. So this is an important week because you're going to get your jobs report on Tuesday. Tomorrow we have some data coming out. The data you have, June PMI, a Chicago Purchasing Managers PMI, that's at 845. They're looking for a nice little jump in it, about 3 points. Dallas Federal Reserve Bank will update the regional manufacturing outlook, and that'll be at 9:30. So it's not a heavy news day there. In the tariff news, just expect a lot. Expect a lot of talk about the Trump tax bill. All right, that's in the Senate. They're right now debating it. They have a stupid rule as an onlooker at the Senate, an outsider looking in. I think if you're going to force the reading of any bill, you call the whole chamber in and everybody sits there through the reading. It can't be Republicans force the Democrats and the Democrats force the Republicans to read these huge bills in empty chambers. What does it accomplish other than a delay tactic? Now, if all the members had to sit there and do it, well, now you can't say that they're not listening to it, all right? It seems to me there's some really stupid rules in place as an outsider looking in, and this is one of them. Now they'll go into debate that'll last hours, many, because everybody on the Democratic side and Republican want to go on record about all the things they're doing for their midterm elections or later on to use this as something they stood up for or stood against for. They want to get on the record. That they could have done. This reading of 940-page bill that takes 15 to 18 hours to read in, and nobody's in the chamber. I was on TV looking at the Senate chamber when they were showing this. I'm cracking up going, it'd be one thing, make all the members be there. Nobody will employ that rule for something like this. And maybe on shorter bills, it means that, hey, they had to hear what's going on. All right. So, as we look at the markets tonight, I can tell you that the futures on the stock indices are all at new highs. Now, that doesn't mean new all-time highs. The Dow is still a laggard. The Russell's a laggard. But the NASDAQ, the S&P, they are on tears to the upside still tonight. May not be that way when we wake. The president, as you know, is on fire about the tariffs. We knew one thing. At least I did, and I said it here. There's no way they're going to meet a July 9th deadline to get tariff deals done. I was clear as can be. I said the most you can hope for are either what they call letters or memorandums of understanding. They're the same thing. Or the president just dictates a term. It'll be the latter part. He's just going to dictate a term if he wants to get something done by July 9th. Of a set tariff. He can always extend what he's got in place now. That might be the simplest thing, but he's getting into battles. Japan's putting its foot down and saying, no, their cars should not be 25% tariff, but what are they going to give in place of that? Canada has a digital tax they're fighting with the president about now, so he said no more negotiations with them. And what about this bombing in Iran that so many now other agencies are coming out and saying the damage, the obliterated term is completely wrong. The question is how much damage and how fast can the centrifuges get back up, not that they were destroyed. What does that do for the war between Israel and Iran? If Iran thinks it's going to be able to develop that weapon and hold it over Israel, I have a feeling Israel's going back in. So let's see what goes on. I can't believe that in Iran they're not smart enough to control what they're saying. Why not just say, if you wanted to hide it, hey, everything's destroyed and you're doing it. Instead, no, we can go ahead and do it. You figure that one out. I can't. All right. Why don't we just go to the charts? You know, one of the markets I'm looking at that may have gotten low enough to get a run now could be Starbucks. They're changing their menus. They're potentially selling off their Chinese business. In other words, they're honing back because you can't keep the phenomenal growth rate that they've had since they were founded up. So they have to do other things. And when we look at the chart, we do see that recently you've got the pattern of higher lows, higher highs, and this market made its lows actually back here, got back up, went up about 40, 50% of its value, slipped back, couldn't quite get to those lows, and it's coming up again. In terms of the resistance, you're looking at it. I thought this was interesting to bring up, and this is why. You're at the 100-week average. You're fighting a battle at the 200 in gray. The green is the 100-week. I've got them all labeled. So you've come up, and this is the key area. Now, a close over 95, 91 will get the bulls very charged. I wouldn't mind seeing a little more churning right into these moving averages, but I do think that unless you get back under these lows, a bottom has been made in the market. When we take a look at where it might go if it were to clear that, well, the 110, 109 area is a logical first stop. Maybe it'll be a little lower. This Bollinger Band's going to fall down when the market reopens on Monday morning. It'll contract. And maybe what the market's got to do is spin around here to develop, if you will, the action for that. But I am thinking upward is the way that the market's going. The momentum's pointing up. You're in the resistance, and slow stochastics are still pointing higher. In Restoration Hardware, to get me thinking the market can do better than this, you got to get a close over 121.88. That's a big move from here. That number won't change. It's going to stay that way temporarily. Now, what the market's trying to do is establish with an outside day that the market's trying to make a bit of a low here. Now, if that low of last week is taken out and that low is 178.80, that'll get this chart looking ugly again, and it's going to me, say, not ready to go. That's the number, my line in the sand right now I don't want to see. And if you've taken my outside day course, you'd understand why. In Netflix, it doesn't stop. It's on fire. I was thinking, as you know, I mentioned to you 1,200, then 1,250, 13, then I'm mentioning 1,350. We got to 1,331. It's just, until it's through, it isn't through. I mean, if you're going to watch or buy one streaming service for yourself, right? Which one do you want? If it's not Netflix, I guess you have your, could be a Sewing Circle. It could be the Discovery Channel, but more likely it's going to be Netflix. In Eli Lilly, fighting your battle right here. You either get up and over 8.25, or if you start down and get close under 754, you could be looking back into the 700, 680s again. It's got to do something here. Home Depot, this is the first time we've closed over the 18-day average of closes, all the way back, my friends, to February. So, doing a little bit better. I like to take notice of those things. It hasn't turned the trend yet, but what's really happening is the Bollinger Bands are collapsing. Are you seeing that? And I think it's going to spin around in here, waiting to see, is the next move by the Fed eventually going to be cutting rates? Does that spur on homes, new buying, get the market going again? Reconstruction, did you go and you demo and you rebuild? I don't know, but it's getting more interesting. Uber, I'm just super bullish. I would never tell you to buy the upper band, but certainly down there, I did tell people that I like it. And if you get into my morning subscriber video, not my morning flash update, what my subscribers see, you'll see where I told people to accumulate that position. ET, the day chart looked terrible. The weekly chart is still holding up really nice. All right, you're overbought. It's not a market that looks to me ready to run, but it could. All right, you'd have to get back under 1733 to tell me this market doesn't have the makings of basing out again. In the industrial sector, still bullish. Higher lows, higher highs. Once you get this embedded reading, embedded is when the red and the blue are going over 80 for several weeks or more. And when that happens, it locks in my opinion, a bull trend. It's what I teach in my enhanced Bollinger Band course. And you often make a run towards the upside, could be the Bollinger Band. In XLE, well, you ran into the resistance for the first time in quite a while. You haven't been back to the 100-week average since the end of March, beginning of April. And when you hit it, you got thrown back. All right. Is it the beginning of something bullish or bearish? Well, this chart going home is friendly, not friendly. Take the name off. You got higher lows, higher highs. If you're buyer here at 85.22, do you really want to risk all the way back here to the 80.72 level, because that's what you'd be risking, 80.71. I'm not in love with that because I'm not in love with energy right now. When I look at the dollar index, you know I'm in the bear camp, have been for a long time. I didn't think we were going to go down to the 90 level in the dollar index. I got my eyes wide open to that now. That's a big move from where you're at right now. You're about 96, and I'm thinking that. Here, 26.59 next support. Are you embedding? Well, you got your numbers under there, and you're keeping them. So the question is, do you have 3 weeks in a row? Week 1. The week before was not. It just oversold. So this is not what we call the bearish embedded reading, oversold condition. Oversold doesn't get me excited. In the gold, we stalled. And you're losing your momentum, starting to point down. And what did I tell you? It's that vacuum cleaner that you have going. In your house, you can hear that whoosh. Hey, hon, if you're in gold, why are we in that? Why aren't we in the stock market? You're missing out on all this, blah, blah. Copper, I feel that I've done my job. I like COPX better than I do copper because I think the miners are the big winner out of the squeeze play that goes on in London at this time. So let the prices go, let it come up. People want to get that copper from the miners. And, you know, we've lost a lot of copper production. I explained that in South America. So now you're back to the Bollinger Band. I feel like I've done my job. By the way, that's the news that we have and other charts that I put on here. There's Dutch Brothers. I look at that when I look at the others. So how do you get the information about the things that we're talking about here? It's in our special offers. You just go to our special offers page at iraepstein.com. You hit an icon. You click on the blue things you might want. The bottom of the page, you'll see you put in your name so we can send you an email out with everything. You get it like that. This charting software. Price counts. Where did I come up with a 90 to 88 level in the Dow? How do you put that together? How do you work with it? That's what we're doing right here. So, iraepstein.com, free offers. Give it a click. I hope you subscribe with us for the morning subscriber video. There's going to be a lot to talk about tomorrow. You have a great day.